Earlier last month, OPEC announced its decision to cut down oil production by 2 million barrels a day, citing economic concerns to minimize price volatility. The US government responded quite negatively to the announcement, even going as far as to say the oil-producing countries have been siding with Russia in its brutal aggression. The response in the market, however, has not been the same, with some of the top oil stocks undergoing a clear rally in the wake of the news. A reduced supply translates to higher oil prices, and therefore higher profit margins for these companies, allowing them to pay out hefty dividends, or engage in substantial buybacks. In light of this bullish rise, which is anticipated to continue throughout the following weeks, we present some of the top oil stock opportunities that are worth considering at present. Each of these stocks is fundamentally primed to take off and win big in the present climate of inflated prices. The first stock on our list of great oil plays is GeoPark Limited, which trades by the ticker GPRK. The stock is great for anyone that is seeking maximized shareholder returns in the wake of the booming opportunity the oil industry is facing. GeoPark is the largest oil producer in Colombia, while also holding a significant presence in Brazil, Chile, and Ecuador. 2022 has been a stellar year for the company, given its enhanced exposure to rises in oil prices. Its annual revenue in December 2021 stood at almost $690 million, translating to an incredible 81% year-on-year growth. For 2022, the management expects an additional 61% top-line growth, taking its revenue above $1.1 billion. Annual EPS saw an improvement from a negative 71 cents to a positive $1.06 in a single year. For this year, the company is well on its way to delivering $4.54 per share in earnings. GeoPark clearly holds all the signs of a company in its rocketing growth phase. The company's management has been using these gains to strategically improve its net debt figure. By the end of the first quarter, net debt stood at $767 million, whereas it has been driven down to a present value of $570 million, in a trend likely to continue with subsequent quarters. The management also increased annual dividend payouts from 12 cents to 51 cents per share. Despite all these improvements suggesting serious growth in this year alone, GPRK price has interestingly seen a net 0% change as of present. This signals a screaming buy opportunity for those looking to share in on these gains. The second stock on our list that we take a look at is the champion of the oil game itself, Exxon Mobil Corporation, which trades by the ticker XOM. With a market capitalization of almost $500 billion, Exxon is one of the biggest names in the industry, yet amazingly is still massively undervalued when considering its wider prospects. Even with declining oil prices in the third quarter of the year, Exxon Mobil reported an unprecedented quarter, with figures it had never previously made it to. Its quarterly revenue figure of $112 billion is its highest in history, translating to a year-on-year jump of 52%. Operating income during this time frame surged from $8 billion to $22 billion, whereas net income jumped from $6.8 billion to a whopping $19.7 billion. This mammoth player is far from its peak, as analysts expect this growth to continue throughout the coming years. One basis for this view is Exxon's expertise in refineries. The core problem the US faces in terms of oil is not the supply per se, but its refining capacity. This is positive for Exxon Mobil, as one of North America's largest oil refineries in operation. It creates the ideal circumstances for the company to expand upon this strategic business unit, further enhancing its growth potential. Exxon is also betting big on natural gas, as global demand is set to surge, as countries seek a reliable energy source to supplement renewables such as wind and solar. The company's 25% stake in the massive Mozambique LNG plant puts it on the verge of phenomenal global opportunity. XOM therefore holds so much potential upside, as well as the capability to execute, that it stands as being too good to ignore. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. For the third stock on our list, we take a look at the Canadian oil exploration and production company, Gear Energy, which trades in the OTC as GENGF. Gear Energy is a small player, with a market capitalization of $250 million, and a $1 share. This stock has a lot going for it, especially given the turnaround in performance it has been enjoying in these favorable market conditions. Last year, the company almost doubled its annual revenue from $46 million to $91 million, and has set its guidance for 2022 at almost $140 million. With this surge of free cash flow into the company, the management has flipped its balance sheet around, from a net debt position of $15.8 million to a net cash position of $9.8 million. They also initiated a 1 cent per share dividend payment for the very first time, and bought back 3.6 million shares in the second quarter of this year. These initiatives indicate the shareholder-friendly management running the company, which is always a positive sign. One reason for this may be the fact that over 11% of the diluted shares are held by company insiders, with many purchasing them on the open market in recent months. Gear Energy may be a small company, but it is primed for growth, that has increasingly been upping its capital expenditure, and is substantially increasing its daily oil production capacity. One other area that the company has been benefiting from, has been the weakening of the Canadian dollar. Since a major portion of expenses is paid out in the Canadian dollar, the depreciation of the currency has led to a noteworthy improvement in margins. Gear Energy is the way to go for someone seeking an early oil player, that is yet to grow to a mature level. Next up we turn to look at the small Oklahoma oil player, Empire Petroleum Corporation, which trades under the ticker, EP. Empire Petroleum's business model, essentially involves the acquisition of long-life mature assets that have a slow decline profile, which then has its production enhanced through field management techniques. Through this approach, involving water injection and sonic hammering, Empire Petroleum has seen its oil production capacity surge in the last 5 years, at a rocketing pace. The company reported 9 operational oil wells in 2018, whereas at present, this stands above 1,100. Empire has been primarily using debt facilities to acquire oil fields under the aforementioned strategy, and has been massively upscaling oil production. The management had brilliantly capitalized on the COVID-19 opportunity, which saw oil field properties see a massive cost reduction, through which it is strongly benefiting in the present oil market. In just the first half of 2022, EP reported revenue of $30 million, which is higher than the complete revenue earned in the year 2021, of $28 million. In the most recent quarter, the company saw its EPS improve year-on-year from a loss of 35 cents a share, to a profit of 24 cents per share. During this time, quarterly revenue ballooned from $4.7 million to an incredible $16.5 million, whereas EBITDA jumped from $3.3 million to $8.1 million. The management has used much of these profits to dramatically strengthen its balance sheet, with its net asset figure improving from $10.8 million to almost $23 million. EP is a unique play on oil, which is definitely benefiting tremendously from the current oil market conditions. Its small size makes scaling up easy for the company, allowing shareholders to join aboard and grow alongside it. The final stock on our list is the American oil and gas company, Ranger Oil Corporation, which trades by the ticker, ROCC. It specializes in unconventional horizontal development wells in the South Texas region. All of its projects are fully private, with no federal acreage exposure, which minimizes dependency on federally regulated pipelines. The company has been growing rapidly over the years, with its 2020 and 2021 revenue figures standing at $259 million and $550 million, whereas the guidance for 2022 exceeds the $1 billion mark. The company, as per its most recent quarter, saw its EPS surge from $1.05 to $5.60. The company has also followed the path of most strategic oil companies, which is utilizing its gains to substantially reduce its debt. It also partook in share buybacks, as well as the acquisition of smaller companies which facilitate value creation. Given its sustainable business model and excellent performance, almost 90% of the company's stock is held by institutional investors, consisting of endowments, mutual funds, hedge funds, and pension funds. This is a highly positive indicator for ROCC, given the in-depth research and technical analysis that has gone into these investment positions. Another aspect of Ranger Oil that is attractive is its operational improvements. The company has increasingly been drilling more wells per pad. As a result, it has driven down the total well cost per barrel of oil from almost $18 in 2018, down to $12 at present. The result is improving profitability margins, as the company continues to scale up. ROCC is a fine player in the oil game that is awash with multiple green flags. The stock is clearly a screaming buy. That's all from us in this video. We hope the insight we aimed to deliver has proven valuable to you, and would allow you to ensure your portfolio holds ample exposure to the exciting domain of the oil markets. We would love to hear your feedback about our list in the comments below. To gain a deeper insight into different stocks that are fit for various investment strategies, be sure to check out our website, stockstelegraph.com.